Hey guys, good morning. Welcome to our morning note. My name is Carlos, CEO of G.A.R Capital. Hope everyone's having a good morning. It is Thursday, June 18th, 2020. Dow futures are down 238 right now, about 1%. NASDAQ futures down about 15 points, pretty relatively flat, outperforming the broader market. And S&P down about 0.70 at 3085. Russell 2000 is the underperformer, down about 1%. VIX is up about 4.5%. Crude oil is slightly green. Bitcoin is up slightly, about 1.23%. Even though futures are down, gold is down as well, down 0.26%. So is silver, down about 1%. 10-year Treasury yields down slightly. Bonds are bidding slightly. Dollar yen for my Forex people, 106.80, down about 18 pips. And dollar index up slightly at 97.30, about 14 cents. And gas futures up about 0.36%. So overnight, so we're starting to notice a little thing, something here, pretty funny actually. Looking at here at futures, you're starting to get a 2 a.m., almost like a 2 a.m. ramp. Right around 2 in the morning, futures tend to ramp up, I've noticed. And it's been happening almost on a daily occurrence. Right overnight, 2 o'clock in the morning, 3 o'clock in the morning, low liquidity in the market, futures, we start to get that ramp. But we're actually in between two moving averages that I want you really to look at. So this is your E-mini futures, as always. Yellow line is our 200-day and the 100-day is your blue line. So the blue line has been support the last 2 days. Now again, this can be broken. We've had that last week, Thursday flush, Friday bounce, and then Monday overnight flush, and then a soar. But again, as of right now, for the past Monday, you're talking about the 100-day moving average has been your support and the 200-day has been your resistance. My resistance has been kind of around 31.35. We've been kind of hitting that, but we've been staying with this in range here. So you can't really say bearish. You can't really say bullish because you're kind of stuck in the middle. You're kind of in a chop range here. So if we kind of want to bring this out a little more, you can kind of see that we're really just at a point now of around 2 weeks ago. So this includes the NFP, this includes the drop, and this includes back to where we are. So again, kind of a choppy range. Don't feel the need to want to get into anything right now or to buy stocks yet because there's not really a really good price to get in yet. So, I mean, if you're a long-term investor, you're not seeing anything here that you want to buy. Again, start making your list. I have mine. Tesla was price upgraded today. Apple was price upgraded today. Some other names out there too. But again, nothing in my head that seems that I want to buy anything here. I do have a couple of call positions with our members, but and good news that they're all tech. So tech is actually up. Like for example, Apple is green pre-market, so is Microsoft green pre-market, so is Nvidia pre-market. The only thing that's kind of down is again we talked about it, the banks and tanks, and the leisure. So let's take a look at it. Steel Corp Industrial down 13%. Carnival had their earnings report was bad, down 6.5, 6.6%. Norwegian down 4%. American Airlines, United, again, back down. Kroger reported their earnings. Actually had a beat on revenue, top and bottom line growth. But again, with Kroger, I've said this before when it comes to grocery stores, guys, their margins are very thin. So I'm not a big investor into grocery stores. If you want to get in the grocery space, get into Amazon with Whole Foods or get into Walmart. Target doesn't have much of a grocery exposure, but I'd rather be in Walmart if you really want to play the grocery space. Boeing, again, another industrial, down 2.26%. Macy's down 1.4. That's retail. Banks, again, down about 0.5%. Bank of America almost down 1%. MFA Financial, again, banks 3%. Apple's green. But again, we're starting to see that level of rotation where when things are really good, I guess more of the high risk, more of the risk on, you start to see the banks, the tanks. Again, when I say banks and tanks, it's industrials and financials, the leisures, your hotels, your airlines, and your cruise lines, and then you'll start getting out of high cap tech, which is like your Apples, Googles, Facebooks, and Amazons. But then when things are kind of into the point of shaky, let's say today down 261 on the Dow, then you start getting a rotation back into the safer names. Start thinking about that big cap tech is more of your safer place. Again, great cash flow, great balance sheet, very little debt. Some of them pay a dividend. They're still high growth names, very low beta, meaning that they move close to the market. But again, you're not going to get the volatility that you would get in regards to the other names like the cruise lines, the airlines, and what have you. So that's kind of tends to be your safety trade. Gold hasn't been that safety trade. I would actually argue that big cap tech is now what utilities and energy was about 40 years ago, where that was the flight to safety because they were the most profitable. They were the ones that provided the most return on equity to investors, and again, less volatile. So think about those. If you don't have those kind of names, Apple, Google, Facebook, and Amazon in your portfolio, you're really missing out on two key factors: solid growth and cash flow with their balance sheets and almost in a sense safety. They're a lot safer. Now they could be crowded. Sure, everyone tends to own them in their portfolio, but doesn't mean that you shouldn't own any either. Again, you're not going to get a massive drawdown on an Apple. You're not going to get a massive drawdown on a Google or an Amazon in a 24-month or 12-month period. So just kind of keep that in mind. If you don't have those in your portfolio already, you absolutely should. If you have an S&P fund, more than likely you're going to have it, the index fund. So again, index funds like S&P, like our SPY, they already have Apple, Amazon, Microsoft, Google, Facebook. They already have them. So again, you don't have to have that need to buy an individual name, but again, you want to make sure to take a look at your portfolio, audit yourself, and make sure you have some of these names in there because they have been the ones that have been lifting the market and been consistent in the market and have been the best return of equity with like a balance of growth and still value. Okay, so let's see here. Good morning, everybody. Made it. Rolls-Royce SPR. I don't know. Rolls-Royce, I don't know if you talk about the stock or the car. SPR, let's see here. Spirit Aero Systems. I don't know much about them, but I'm looking at here. You can see a downward wedge here. I mean, you're almost looking at shorting if anything. I guess if you break $26, you can start looking at some puts. But yeah, not looking much there. Looking at Microsoft here, yes. Microsoft is still kind of just, you can see here, still treading water. But again, 195.23, I would say 197 we should break and should be home. We've seen this before, guys, where we have these kind of falls, the futures like on Monday, and then we soar. Basically, everything now is COVID. We had a COVID increase in cases. Was the economy world opens up, but again, the president said last night on Hannity that they're not going to close the economy ever again. Like that's done. So again, in a sense, you're going to get these cases which spook the market again. You're going to have algorithms that respond to these cases. We just had our unemployment numbers; they were worse than expected. But again, sometimes they get revised. Again, that's the next week or before. But the market really doesn't react to those unemployment numbers. They're already expecting the worst. But these COVID cases are a wild card. A lot of people don't know what to expect with them. So again, with ES bouncing like a ping pong ball between the 50 and the 100 day, that's about a good 30 points, 24 points. So you're going to get that back and forth. But I still like Microsoft long here. Again, 197 is your level. I have the 200 calls personally, uh, and we played them with the YouTube channel as well. But we got those, and I re-entered with the team, and that's where we are right now. Good morning, DLR. Oh, RRL. Let's see, RRL. It doesn't come up in my here. No, I don't have that, boss. I'm sorry. DLR. Digital Realty Trust. Okay, so looking at here, I don't know much about them. I'm assuming they're a REIT of some kind. Looks like a nice boost pre-market, but then kind of a fade here. So you're kind of reverting back. Looks like around 146, 147 is your resistance. It's right now bidding at 147. I mean, the ask is at 147, the bid's at 144.58. So kind of a wide spread. Uh, you have to give me more information on it, to be honest with you. Apple 355 call, any chance of getting it? Let's see. Apple 355 call? Yeah, I mean you can. We got out of that yesterday with YouTube. We had that, but yeah, you definitely have a shot. Still have it. Again, you have Thursday and Friday, and you can see here it's still holding up. It's still holding up this level here about 350.94. No, just DLR. I don't know what DLR is in. Nvidia, yes, Nvidia here. That was a signal for our members. yesterday, playing the gap, and 372.32 needs to break. It is slightly down about 30 cents pre-market, even though this Dow is down. So again, you still have the ascending triangle here. It is testing resistance of 372. Once you get that break, you should be home. Let's see here. Okay, we got some rapid fire here. Disney, I am a shareholder as well, but I'm not trading it here. Not much to trade on. Last time I played puts on anything, I got burned. So again, it's really tough to play puts here. And Disney is not at that level yet. Yes, we're still below the 100-day, but I would say if I'm looking to reload the stock that I'm looking at, I want to see if we get a break of 110. Beyond. Beyond, I had calls personally on it, try to play the breakout of 167, and then we faded. So right now, green pre-market. This one does love to shoot up. It's a momentum name. So again, I just need a break of 162 and then maybe get to 167, see if we get it. But the volume came in very strong today or yesterday. Let's see what we get on it. Spotify. Yep, I heard about that. They had a deal with Kim Kardashian. That's one app I love to use personally, but I don't own the stock. I just have way too much tech. But Spotify is doing very well. Let's take a look at the options in the morning. But again, it is testing the highs here. I don't know if it's all-time highs though. Yeah, near all-time highs already. So if there is really no roof on this one, so you just have to follow it. Thoughts on Tilray? I don't own any weed stocks or cannabis. The only one I would want to get into if I were you, only one I would want to own, and I've been saying it, is CGC. And Tilray again hit a high of $11.60 last week. You're down to $8.04. Just expect volatility from those names, guys. Again, when it comes to pot stocks, I don't see any reason to play that. When did that deal come through? I think it was about 2 days ago. So now Spotify is really upgrading or updating their talent. You have Joe Rogan and now Kim Kardashian. So that's pretty big news. So Spotify has been definitely outperforming. Spotify and Shop, those two have been really sticking out, and I don't own any of those as of yet. But that's those are a couple names that I'll be talking about in our investment club biannual conference to go over things with them. Speedy even after spready even after open. Yeah, it's true. Spready. All right, guys, we're gonna go ahead and leave it there. I'm gonna catch up with my team. We'll catch you guys tomorrow for our morning note as well. And I'll see you guys at 9 a.m. Make sure to like and subscribe our videos. We'll see if we can do another live video pretty soon. I know you guys enjoyed it. Got a lot of positive feedback. So we'll see what's up, guys. Have a great rest of your day. Happy Thursday. Happy trading. We'll catch you guys tomorrow morning for the morning note.